Hello everyone, welcome back to my channel. So this video marks the end of week number 31 in this road to 100k realized return challenge. And yeah, this week has been a perfect storm of bad news. Not only the threat of tariffs, which has been looming for the past few weeks. Apparently they are going into effect at the beginning of March, so in the next few days. I think it's March the 4th, so it should be on Tuesday. Also, several economic reports have been giving some warning signs about the health and the strength of the economy, of the US economy, and also the results of Nvidia added to the mix of not so good news, because even though earnings and revenues they exceeded the analysts' expectations, apparently the profit margins were not as good as they were before, and so probably the darling of the stock market for the past months and even the past 2 years now appears to be losing some steam, and so investors took a very negative light on that, and that's why Nvidia had also a big drop of 8.5% on the next trading session on Thursday, as it went down by 8.5%. And to wrap things up, on Friday there was some recovery. The major index, the S&P 500, the Nasdaq, also the Russell as well, they recovered some of the lost ground, but overall this was a very, very negative week for investors. Even so, I think we dealt pretty well with it, and I must say that I'm very, very satisfied with the results that we've got. As you recall, at the beginning of the week, I told my followers that the market were playing games with us when we sold some calls on Pfizer. And why is that? Because the market, we filled our order for selling the calls at exactly the lowest point, so we got the least amount of premium that we could get. As you can see here, we got to the point we sold the calls at this point, so we got the least amount of premium that we could get, and then the stock shot up basically. And at some point, and I never came across such a situation. As you recall, we sold call options with a 26.50 strike price, and immediately after we sold our calls, and the stock price went as far below as here, 26.10, 26.15, 26.05. Immediately the stock shot up right towards our strike price, and as you can see here, on Tuesday it even touched the 27th here, the $27 mark, and so our call options were way into the money. However, and of course I was already cursing myself for not having sold a $27 strike price call option, but because also the call buyers felt that it was not still worth to exercise early. They would have made some profit out of it at the time of if they exercise at this point. However, over the next few days, the stock just came down and down and down, and at some point here, and remember that we had some puts on it. We had sold some puts on Pfizer with a strike price of 26, and so the $26 mark is here. So as you can see, during some time on the last trading day, so on the 28th, as you can see here, the stock was the puts were in the money, so we were in a position that we were going to buy some shares, some more shares of Pfizer at this point. However, the stock then recovered, and it ended up again very close to where it started the week, basically at 26.50. So this graph over here, you can see that over the course of the week they went to 27. They started at around 26.30, 35, went all the way to 27, then dropped to 26, and then it recovered to finish in the same way as it began the week. So this was a big roller coaster, and of course because of this our calls and our puts on Pfizer simply expire worthless, so without any value. I don't know why this is not showing. Oh, now it's showing. All right, so as you can see here, the puts on Pfizer expire worthless. We had 3 contracts here, and the 24 calls that we also sold, as you can see here, we also expire worthless. I sold 2 more puts in addition to the one that I already sold in here, because of as we collected more premium, we got the funds to do that. So yeah, basically this is what happened, and so and this is what happened for Pfizer. Now, as things stand at the moment, the stock currently is at 26.35, even though it got to a point in which yesterday on Saturday or on Friday, that it got very close to the strike price of 26.5 for the call. So I almost sold these shares, but it ended up not keeping that price, so it came down a little bit. So that's why all those calls fell to the wayside without value. Now, in terms of the QQQ, this was a bloodshed, because the Nasdaq behaved very badly over the week, and as a result, of course, the QQQ also came down, and you can see here what happened over the course of the week. But because our cost of acquisition was 535, it was no longer possible to sell 535 strike price calls on that, and so we had to adopt another strategy, which is basically selling at a slightly lower strike price. And as you can see here, we sold at 525, 511 as well. And here we also sold at 535, but with 3 days of expiration time. But because the index continued to fall, we just bought it back in the same day. And if I'm showing this here, even though I can also show it in here, as you can see here, this put here, this call here, it was for 3 days. It was on the 27th, but we simply bought it back the same day at 2 cents, because it was had no longer almost any value, because the market continued to drop, and so it made sense to buy those calls back and resell again at a lower strike price. But again, because of the way we did this, we took a little bit of risk. It ended up being all right. I'm going to explain in another video how did I manage to do this, what was the reasoning and the calculations that went for me to select these strike prices. It's going to be a very interesting one, so stay tuned. But for the time being, this is where we stand at the moment. At some point during the last few days, on Thursday and Friday, the stock even went below the $500 mark, as you can see here, especially during Friday. Here, as you can see, it went below the $500, but it ended up recovering at the end of the day. And now for the next week, we will have to probably adopt a similar strategy to what we did when the stock was trading at around this point. And again, I will explain in another video, which I will release. I hope to release it, to post it later next week, probably on Wednesday or Thursday, so that I can explain to you how can you do this without much risk of selling the stock back at a lower price of acquisition and avoiding that to lose money in the process. But as I mentioned, we managed to deal very well with this downfall, and this is going to be part also of the next video. As you can see right here, we managed to over February 2025 we managed to outperform all the major indexes in the US stock market, in the New York Stock Exchange. So we outperformed the Nasdaq. We also overperformed the SPX, the S&P 500, and also the Dow Jones. And this was a very, very positive development for us, even though, of course, the market performed badly over the months. It was a negative month, and especially the last week was not very kind to anyone. But even so, we managed to outperform all of these major indexes. And if you have a look at the performance over the month, the S&P 500 dropped over the month of February 1.42%, the Dow Jones 1.39%, the Nasdaq dropped 2.69%, and we still managed to get a very small profit, 0.02%, which of course in the context of falling markets, I think managed to eke out a small profit was very, very good. When it comes to our earnings, and this is the activity statement up to yesterday, so the puts and the calls that we had live also yesterday are not accounted for the realized gains yet. So as you can see here, if we pull, and we have already the realized profits here, the columns of the realized profits here, and if you look for Pfizer, for example, we have these puts and calls here, these two puts and this call, and as you can see here, that this one was already realized. We already realized this gain, but these puts here and these calls were not yet accounted for in here in the realized gains. So yeah, we would have to wait until the next report. And also the profit that we had on the QQQ on the last calls that we sold here, the 511 strike price. You can see here that it's not yet realized. It's still unrealized because it was still live at the time of yesterday, and so that's why it's still here. But nonetheless, if we accounted for these gains, we have already exceeded for sure 31,000 here, and by my calculations here in our scoreboard, this, like the week before, in which we had a profit of 798, and I can show you that in here. For example, here, if you can see, as you recall, we had actually because this was we cannot account for this one because this was not yet. This only expired this week. So, but as you can see here, we had accrued a profit of $798. All right, and here, as you can see, we also managed to get a profit of $855 just over this week, not counting with this $6 extra, so this should be around 860. All right, so this was also a very productive week. We managed to eke out all these gains with a falling stock market, and this was very good. We managed still to eke out these rate of returns, which were quite good, and these are in red because these are very tiny ones, but in a context of falling markets, we still managed to get some profit out of this, which was very, very good. And this tells in a nutshell what is the power of options trading. Even when a market is falling, you can always get some profit out of it, which is extremely, extremely interesting. But for the time being, this is it. For next week, the plan is the same. We will have to see how things develop in pre-market trading for Pfizer, because at this point, as things stand, the 26.5 strike price call options are good, but there is still a chance, if the stock continues to rise like it did last Friday, so yesterday, if it goes very, very close to 26.50, we are going to be a little bit greedy and try to sell this one at 27 and try to get some profit out of it, some additional profit, which would be, of course, very, very nice. With those funds that we still have, with this buying power, probably we will sell some more puts on Pfizer to try to get some premium out of this cash, and of course with the strike price of around 26, because I don't think there's going to be too much worth it in selling at 25.5, because the premium is quite low, and the $26 strike price would still give us some reduction of our cost base. So this is the plan: selling puts on a 26 strike price. This is certainly what we are going to do for the puts, and either sell at 26 the calls at 26.5 or 27, depending on what the stock does in the pre-market. Now for QQQ, again, just as I said, with this price, with this current price, there is no way that we can sell options at our acquisition price, unless we extend our maturity, but we are not interested in that, because then we incur in overnight risk when we don't have to. And so probably we will have to adopt the same strategy as we did for the last few days of last week, and so we will have to probably take one of these calls that are selling at a lower strike price, but in order for us to get some premium out of it, while minimizing the risk of having to incur in some loss. I think I explained everything in here, so yeah, I think this is it in terms of our menu of portfolio, the main overview of portfolio. So yeah, I already showed that we outperform all the three major benchmarks, the Nasdaq. So our current profit all time is 16.61, which is good considering the fact that we went up and down. We had quite a dark periods in here over the course of the last few months of last year. So yeah, things are looking encouraging, so we will just keep hammering it on it until we reach the 100,000 in realized returns. So far, this is it. Feel free to leave your comments below, and any questions you may have, you can also leave it there, or you can DM me on LinkedIn. And also feel free to like the video and subscribe to the channel. And again, we will reconvene for the start of week number 32 on Monday, and over the next few days I will post another video where I explain how did I manage to beat the market in February, and how did we manage to stay out of trouble, even though with selling QQQ the QQQ shares without taking the risk of a loss, despite selling the options at a below cost strike price. And yeah, I'll see you there.